So let me get your name clearly, Mr. Daniel
Yeah, Daniel Komolafe.
Komolafe. Okay, Mr. Daniel Komolafe. Komolafe. Okay, Mr. Daniel Komolafe. Okay, while the session is ongoing and you are talking, and you notice maybe I went off maybe network, just keep flow. I'll definitely be back. Like I'm saying, if there's breakdown, sometimes our session is ongoing and maybe my network will move me, kind of affect the speaker, and there's a flow. So keep it flowing. I'll definitely be back before your conversation will go off. But I'm just saying in case it happens today.
Okay,
Oh,
no problem.
okay. Hello, everyone. Welcome to another episode of Agritech Founders Diary podcast. Today is a very special day as we have an amazing guest joining us in the studio. We'll be exploring what it takes to raise capital for infrastructure, focusing on businesses, what investors look at for beyond just the pitch, beyond the lessons Agritech founders can learn about scaling investors ready companies that solve fundamental ecosystems challenges. That's what we'll be looking at today. But joining me today for today's conversation, we have Mr. Daniel Komolafe, an engineer and business leader who has spent years working at the intersection of renewable energy, infrastructure, and business growth. Through his work, first through his work leading First Electric, Mr. Daniel has built Mr. Daniel has built and has helped expand access to clean energy while tackling one of Africa's most persistent development challenges, reliable infrastructure. So, but before we dive in today, this episode is supported by Agritech Investors Group, a private community where agritech founders and investors exchange practical insights on market access, adoption, fundraising, and scaling and cultural innovation across Africa. If you are bidding or investing in the agritech and want deeper conversation like this, we'd love to welcome you into the community. Once again, thank you very much, Mr. Daniel, for joining today's session. It's honor to have you join us today.
Thank you. It's a pleasure.
Thank you very much. So without wasting much time, first question: can you run us through where it all started from? Tell us your journey. What led to you building this company?
Yeah, absolutely. Right. So I'm an engineer. I spent the last 13 years of my career in engineering space. My role before founding First Electric was a commercial leader for General Electric in the gas power business, developing power plants all around Africa and some of and some of Middle East as well. And in 2019, I just felt that we could do something a bit different. I just felt that with all the experience and knowledge I've gathered over the years, and the fact that in Nigeria we still have 85 million people not having access to electricity, especially at the grassroots, people in rural communities, that something can be done about it. And I saw solar as being a resource that Nigeria has been blessed with. And I understood that if we can engineer a business model where the major barrier, which is affordability, can be removed, then there can actually be a solution that can impact the lives of people. And that's what we set out to do by founding First Electric in 2019.
Well, thank you very much for that. I didn't get to say this one. First of all, congratulations on your recent fund milestone. I mean, that was a huge one, right? But so before we move further, I would love to ask you, what convinced you about the infrastructure, especially particularly the energy space, looking at what the problem what looking at the problem and the you are trying to solve with your company. So what first convinced you about infrastructure around energy?
So for me, it's about the outcome. Regardless of whatever industry you are in, you can be in agri-tech, you can be in hospitality, in healthcare. One thing is common: infrastructure is needed, and
Mm-hmm.
energy infrastructure is the infrastructure that everything is built on, right? Even
Okay.
if you're in a cold chain business, you need electricity. If you're in a hospital, you need electricity. So that's the
Yeah.
common thread that basically every sustainable economy can be built upon. And we wanted to do something that, one, we knew how to do, right? And two, would make a real impact, and will create the foundation for prosperity to be
Mm-hmm.
built upon. And for us, that was the reason why we went for infrastructure. Not because it was easy to solve. Actually, it's a very difficult problem to solve, but then it's a meaningful problem if you're able to solve it. And that was why we went for infrastructure.
Ah, okay, makes sense. But let me run us through what are some of the challenges you faced while you were, at the early stage of your building. What are some of the challenges you faced, and how did you overcome some of those key challenges at the early stage?
Yeah, I mean, the challenges are enormous, right? First challenge is choosing a segment of the market you think you can make a meaningful impact. There are so many segments of the energy infrastructure market. There's the small rural, there's the medium rural, there's the CNI, there's the interconnected mini grids, there's utility. Also, once you've chosen that area, you need to develop an offering, a product market fit. And for us, that took a lot of iteration, and also understanding what's available in the market in terms of technology and where the gap is. And we had to overcome all of those technological challenges, market challenges, and one of the most important ones was financing challenges. With every infrastructure business, you need
Yes.
traction. You need traction. You need
Yeah.
people to trust that you can deliver. So for the first few pilots, we had to find innovative ways of getting finance to give ourselves the track record we needed
Yeah.
to be taken seriously by institutional investors. Those were very difficult problems we had to solve.
So, but how did you solve those problems?
So, for example, on the technology challenge, we explored grant options where we got some
Mm-hmm.
grants to pilot the energy as a service model using smart energy meters. On the financing problem, we also explored grants. We explored grants from the likes of Olon and USADF. We also explored the angel investment. So most of the people around me, my friends, family members, high net worth individuals within my network, we explored talking to them, communicating the vision we have, and getting them to buy into it, right? And of course, in exchange, we gave them some equity in those at very, very reasonable valuations in those early days. So those were some of the ways we solved the financing challenge and the technology challenge.
Of course. Thank you very much for that. Of course, building in the infrastructure space is quite not easy. First give you the confidence that this is what investors will be interested in this, or this is how do I throw that question now? What will give you the confidence that investors will be interested in tackling this kind of challenges at the early stage?
So we didn't set up the company to get investment or to attract investors. Yes, of
Mm-hmm.
course, we set out the company to solve a problem, but
Yeah.
we also need to wear the lens of scale and investor lens. So what we looked at was the unit economics. We looked at the
Okay.
unit economics. What
Okay.
kind of returns are investors in this space usually interested in, right? And we looked at how much, for example, in terms of exit value, what's the multiple on investment are they looking at?
Mm-hmm.
So those were very important matrices to understand based on the investors in my ecosystem. And then I looked at the unit economics. What would it cost me to generate 1 kilowatt hour of energy? And how much will I sell that kilowatt hour of energy to get enough margin to be able to return that kind of value to my investors or my financiers, right? And those were the ways we had to understand it and generate an offering that investors were interested in. So you need to just do your research. Do your research to understand the investors in the ecosystem you are looking to the kind of investor. There are all kinds of investors. There are debt investors, there are equity investors, right? And then understand your unit economics. What does it actually cost you to generate 1 unit of your value, and how much will you sell it at to be able to return to your investors? And also be careful that the price you're selling at is a price that your customers can also afford.
Customers. Yeah.
So those are all the different points and frameworks you need to have a very good understanding about before you can make an offering that makes sense to your customers and also to your investors.
Great. Now you talked about founders to be careful about dirty investors and equity investors. What do you mean by dirty investors in that
Debt,
context?
debt,
Okay,
not
debt.
dirty.
Okay, I thought
Yeah.
you meant debt. So I went, okay, debts. Okay, so can you break between, okay, what's the difference between a debt investors and equity investors?
So equity investors are those who, in exchange for the money and funds they give you, they are hoping
Mhm.
to get some kind of equity stake, like a percentage ownership of your
Yeah.
company. And your debt investors are your banks, your financial institutions, or even some VCs, right? Venture
Yeah.
capital companies, right? Where in exchange for the investment, they hope to get a return, an interest, maybe an annual interest of a certain percentage every
Oh,
year.
okay.
Yeah. But you have
I
also
see.
some that are hybrid, right? So they get a little bit of equity, they get a bit of
Equity
an interest as well. There are all kinds of
investors.
instruments for
Okay,
investments.
fantastic. So people often celebrate their announcements, right? Like when you recently raised, there's a lot of buzzy, a lot of celebration, but rarely do they see the journey behind it. What did it actually take to reach these final milestones for you?
I mean, in a phrase, I would say is it took years of persistence, right? After founding a company in 2019, we didn't raise our first institutional funding until last year, which is 2025. So that's basically 6 years, 6 years of persistence, 6 years of hard work, 6 years of not giving up, right? I mean, countless financial models we had to go through, due diligence sessions, very difficult conversations we've had with our investors and financiers. Raising capital is very difficult. Yeah, from raising infrastructure capital, should I say, is very difficult from raising venture capital. Investors want evidence that you can deploy capital, and they want to make sure that you have the the governance structure to ensure that this capital and this return will be a going concern for several years. So I think we had to build our governance structure. We had to get our board of directors in place. We had to show that we're having board meetings quarterly, annual returns or annual AGM with our shareholders. It's a whole lot of governance, I would say. Governance, persistence, and hard work, and a bit of luck as well. I mean, luck is also a very important element that makes these things work out.
Works. Yeah. Once again, congratulations on that feat. I mean, it's not an easy one at all. But looking back, what do you think investors saw in First Electric beyond the technology itself? Was it the team? Or what do you think investors saw in you guys that make them invest? Was it your team? Was it the execution? Was it the market opportunity? What do you think really make them interested in investing in with you guys?
So I think you've touched on some of the very important points that made them invest. If you were to ask me, I would say technology alone rarely wins an investment. I think it's four main things. I mean, the first one I would say is the market. We
Mm-hmm.
chose a sub-segment of the market that has largely been ignored for many, many years. When I say sub-segment, I mean the small rural communities in Nigeria. Small rural communities. These are communities with less than 500 households within the community. It's a very large market in Nigeria that has been ignored for many, many years. Right. Second was the team, the management team, to show that they have the right competence and experience to be able to deliver on the vision. Personally, I have more than, like I said, 15 years experience in the energy space. My marketing team, my head of finance, chief operating officer, these are people that, we've had to get them together based on their ability to deliver. right? So that was also one of the main things that gave investors confidence. And third, I would say, is a innovative financing model, a financing model that removes financial barriers to
Yes.
adoption, which is the
Mm-hmm.
energy as a service model, where people can enjoy sustainable and clean energy without having to buy the equipment or having that high capex barrier. So that was very innovative. And finally, I would say it was our evidence that we can execute, not because of what we said, but because of what we have actually done previously. From the angel investment we raised, from the family and friends investment we raised, we had deployed that capital in a smaller scale, and we could show that the assets we deployed were generating revenue, and it was a net positive MPV. And then it just showed that these were all the things that came together to make the investors confident that we could deliver on the investment.
I mean that's a huge one. How long have you been building now so far?
So far it's been 7 years. 7 years now.
7 years. 7 years. So what's been like in the last 7 years? What has entrepreneurship? What is that one thing you think, based on my experience, this one key lessons I've learned from my entrepreneurship journey so far, that might not be in any book, might not be in any it's not going to founders cannot find it in a book. It's just a unique experience that the last 7 years I've been building. This one thing I've learned that has stick with me, that I might, that I might carry to whatever company I want to build again.
Interesting question. I mean, there's no knowledge that is hidden somewhere, right? I think my perspective is also quite common to most founders as well. But I'll say one thing that has probably shaped me, and that has been quite groundbreaking, would be the fact that entrepreneurs focus so much on the product itself, but we should be focusing more on the market and the customers. One word I would say is unit economics. Unit economics is very undervalued, right? People don't value it enough, but unit economics can actually make or break your business model. Obsess about the unit economics, make sure it makes sense, and then obsess about the size of the market. Make sure you find yourself in a market where you could potentially be a monopoly if the conditions are right. You could potentially be a monopoly in the near future, right? And I think if you can get the unit economics right, the market is large enough, and you can build a very beautiful team that can execute. I think that those are for me the ingredients to running a successful business.
I mean that monopoly you talked about is really, really important. I wish founders who be listening to this podcast can hear that again. Anyway, moving on. How many Agritech founders are trying to solve infrastructure related challenges, right? But whether that will succeed, that's another ball game for another story that we need to tackle, because of course there's a lot of irregular irrigation, there is cold storage, there is logistics or energy. But what lesson from your fundraising journey do you think that are transferable to these agritech founders, that what's that lessons that are transferable to them?
Yeah, sure. So I would say one thing I've also learned is matching the investment need, right? The right type to the right type of capital, right? Short-term investments need, like a working capital need, you need a working capital investment. Infrastructure infrastructure need, you need infrastructure capital, right? There should not be a mismatch in the type of capital and the type of assets that you are getting. So that's one thing that's also very important. A lot of people don't understand that. Infrastructure is a business model. That's the way I see it. Infrastructure is a business model, right? So if you're solving a cold storage or irrigation or logistics problem, the nature of investments or investors that are in infrastructure, they like long-term predictable cash flow. long-term predictable cash flows. So you need to ask yourself, how can I create a recurring revenue out of this business model? How do I reduce the risk?
Yeah.
How can I make it financeable? So it's not just innovation. Innovation is great, but infrastructure investors really don't. Innovation is great, but they care more about the predictability of cash flows, right? And that's what you need to really focus on if you want to finance an infrastructure investment, the predictability of cash flows. So you need to do things like getting exclusivity agreements, if possible, for a long
Mm-hmm.
term. You need to make sure your operating cost or your O&M cost is fixed to a large extent. You need to make sure that for example, your revenue currency, there's no mismatch between your financing currency and revenue currency. So if you have a revenue in naira, try to get your loan in naira so that there's no mismatch, right? So those are the kind of things that erode your predictability of free cash flows. So I think that's what Agritech founders should basically look at when trying to solve infrastructure solutions.
Okay. Um, what should be? I think your infrastructure is not focusing just on agriculture alone, right? It's, can
No,
you
no,
honestly?
we are focusing on
Yeah.
energy access in rural communities. So we do solar, right? But that's the bedrock of other agri-tech solutions that we
Yeah.
deploy within the community. So on the basis of our solar infrastructure, we now
Mm-hmm.
deploy things like solar-enabled irrigation, solar-enabled cold chain solutions, right? So that's kind of what we provide.
Okay. Great. Thank you very much for that. Fundraisers, people, funders who are trying to raise funds often believe that raising capital solves their biggest problem. What's your perspective about that? Or has it changed for you? Do you think raising funds solve the biggest problem for them, for funders?
I mean, no doubt raising fund is very, very important. But there is something more important. Raising
Mm-hmm.
fund amplifies raising funds gives you power. It gives you
Yes.
ability. It gives you
Yes.
ability, right? But underneath that, you need to have something that will be amplified by the funds. If your execution is weak or your business model is weak before fundraising, the more funds you have, it will amplify the weakness or the problems within your business model,
Yes.
right? So I would say raising funds is an amplifier, but you need to fix the underlying business or ensure the underlying business is ready so that when the funds come and you scale, a problem, you're not scaling a small problem to a big problem, right? I'm not a problem, I mean the business inside the business, right? So, and also raising capital increases accountability. When you raise money, you need to make sure you have the right governance structure in place so that you're no longer managing your own money. You're not managing your money. You're managing a team. You're
Yeah,
managing
managing
the
people.
bank's money. You're managing
Yes.
your equity investors' money. It's not.
Yeah.
It's not a small responsibility. You need to be ready mentally, socially, and also with your business capability wise as well to be able to accept that funding. So yes, raising fund. Um,
That's
what
solve.
was it? Helps
That's
solve a
solve.
problem, but there are some
Yes.
other underlying things that needs to be in place before doing that.
Okay. I mean that was pretty clear. A lot of people think what we see these days. A lot of people think a lot of funders think it's fun just raising funds. I like that you take it a bit further. That for raising funds is not just it's quite tough, but it's also necessary. But to keep the company running, but underneath it, there are a lot of other things. Managing people's money is a really huge responsibility. I I completely agree with that. Okay, but if an agritech founder listening to today, hoping to raise institutional fund in the next few years, what should be what should they be building? What should they be building long before they ever or start pitching to investors? What should they be doing before they ever, I'm saying, and if father is trying to raise in the next future, what should they be doing now before ever pitching to investors?
I mean, a few things. The first one I would say is governance.
Mm-hmm.
You need to set up your business ready for investment. So, for example, if you are an enterprise or a sole proprietorship, I would say incorporate your company as a limited liability company, right?
Mm-hmm.
To show some level and get some board of directors in place or board advisors, right? It shows you are accountable to someone, right? Governance.
Yes.
The second I would say is data. What do I mean by data? I mean, with the small money you're able to get, make good use of it to do an MVP or
MVP.
something, or pilot, to show that the underlying business model has merit, even at a
Mm-hmm.
small scale.
Mm-hmm.
And thirdly, I would say build credibility. How can you build credibility? You can build credibility by going on accelerator programs, pitch competitions, where a third party will say, okay, we've looked at you and we've awarded you this thing because your business had merits. I think those three things, governance, data and traction, and credibility, it really it creates a story around you, right? It creates a story that is compelling, a compelling story that gives investors confidence. Because what you really need to be doing is building confidence with investors that their money would return value. And I think those are the three things you can start doing today if you plan to raise money in the next near future. You know.
Great. I mean, that's amazing. But before we finally go, what's your last advice? Or be like your last words to any agritech founders listening to this podcast? What's like your advice to them?
I would say this was an advice I gave one of my friends recently that also wanted to start a business to make money, right? I mean,
Mm-hmm.
for me, money is a side effect, is an effect of creating value. And I think we don't focus on that enough. We focus on the end goal, which is the money, right?
Yes.
I would say
Yes.
don't build for fundraising, don't build for the
Yes.
hype,
Mm-hmm.
build for value creation.
Mm-hmm.
Someone said that don't solve a vitamin problem, solve
Yes.
a painkiller problem. Find a problem, some problem that is really hurting someone somewhere in a sector, and create value within that industry and that
That's
sector.
problem.
And if you can consistently solve real problems and you can execute with excellence and earn the trust of your customers and earn the trust of your stakeholders, then investors will eventually notice. In fact, it may get to the point where the investors will come looking for you, right? Capital only flows where there's credibility,
Mm. Mm-hmm.
right? Africa does not lack opportunities. What we need more are companies that are capable of converting the opportunities around us into scalable and investable businesses. Right? Look at what Aliko Dangote has done with the refinery. Right
Refinery.
today, we've always had oil in Nigeria for more than 50 years. But what he did was he created an ecosystem with his credibility. He did not start a refinery today, right? He did not start a refinery immediately he started. He started the refinery after he had built credibility over years and investors trusted him. And when he mentioned he wanted to build a refinery, of course, investors were also very eager to follow him on that journey because he had built credibility with them. So I think investors should, or be startup founders should focus on building credibility. It will
Mm.
help them in their future. Another story was one time we're looking for cash to unlock
Mm-hmm.
one of the debt investments we had secured. And it was an angel investor, someone I had known over the last 15 years that I was able to pitch my business to. And he invested, not because um, of anything, but because he knew me. And over the last 15 years, I had built some credibility with him. So it's very, very important. You know, build for value and build credibility. Those are the two things I would say.
Great. Thank you very much for those thoughts. All right. Um, one more last question before we finally go. If there's one lessons from the entire fundraising journey that you wish every Africa founder understood earlier, what will it be?
Hmm. I would say be bold. be bold, be bold and brave, right? And believe in yourself. Be bold, brave,
Bold
believe in yourself.
and believe in yourself. I think I like the message you are closing with: be bold and believe in yourself. Once again, Mr. Daniel, thank you very much for taking our time to join us today in the studio. Sometimes one lessons learned early enough can save founders years of unnecessary setbacks. So thank you very much for joining us and for sharing your story, being your story with us today. Today's conversation will remind us that investment is not simply rewarding for a good idea. No, it's often the result of years of preparation, discipline, execution, and solving problems that others are not really willing to solve. And your life is a testimony that it is possible. I'm excited to see more young people. You know, I mean, young people. When we see people like Dangote with things like, is it even possible? But when we see people like you, it's more like you give us hope. You give our generation that this thing is possible. We can do it. We see more young people. When I say young people, I'm looking at when we see people like Tunolu Melo, we see people like Dangote and the rest. We look like it seems like it's only when you get to their age you can build credibility. But from today's conversation, you made it clear that you talk about Dangote building, he didn't build the refinery today. That he has been building years ago, since building that credibility. So you are already on that path, and you are also like an inspiration to us. Like, we also come in like, okay, if people like Mr. Daniel have been able to do it, it's also possible for we as young people to start building from where we are, building credibility for the future that we can maybe
Yes.
tap into to build something more bigger like a refinery. So once again, really thank you very much for coming around and for sharing your journey with us. So this conversation was led by the Agritech Investors Group, a private community where Agritech founders and investors exchange practical insights on building and scaling agricultural innovation across Africa. If you'd like to join the community, we'd love to have you. And if you are building solutions that are shaping the future of agriculture or the system that supports it, fill out the guest intent form link in the episode description to share your story on Agritech Founders Diary. You can catch this episode and more on Spotify and Apple Podcasts. Until next episode, keep building solutions that create lasting impact. Once again, thank you very much, sir, for joining us in the studio today. It's a pleasure having you.
Thank you. It's a pleasure. Take care. Bye bye. Bye for now.
Bye, everyone. Thank you. So
Yo.
yeah, we've ended this. We've ended the once the record is out.